We have seen gold headed for a second quarterly decline, but for the month of March, it's trading nearly 2% on the higher side, still holding 1600, slightly in the negative in the European markets right now, but 1600 holding on your screens for the gold prices. The sentiment is that the Fed stimulus may continue because of the weak housing numbers that we have seen come in for the month of Feb and March, and that really has been supportive for the commodity there. On MCX also 0.25% of a decline coming in, and that's because of the slightly appreciation in the rupee, and also there's a bit of a buying coming into the physical markets as well. The crude prices continue their uptrend there. $96.50 on NYMEX is how that one is trading. We also have seen natural gas prices continue to be on the firmer side. The declines really have continued for the base metal sector there. The copper prices are down 7.5% for this quarter. You also have seen lead prices down by 8% for 2013. The zinc prices also trading nearly 4 to 5% on the lower side for 2013 at this point. Today again continues to be a weaker day, nearly a percentage point of a decline coming in across base metals in that sector. Let's get in then. Biren Vakil, he's commodity consultant, Paradigm Commodities, and he joins us live from Ahmedabad. Biren, hi, welcome. Let's start with the energy space first, and it's been a good 4 or 5 weeks of continuous strength coming in for this sector. How do you look at crude prices going forward in the next quarter now?
I think WTI looks recovery seems promising, and I think it is rising energy complex does reflect US growth story, which seems robust and resilient. So I think crude may hit, especially WTI may outperform Brent and may hit 100 or maybe 105 in coming months.
Biren, what's your sense coming in for the natural gas prices? Because that clearly has been an outperformer in the energy space. Do you see the gains continue?
I think there may be massive short exposure in this space, and I think some out of money call may be active, and I'm expecting delta neutral hedge kind of short covering bounce. Fundamental side B, it seems market is oversold in monthly charts as well, so I don't rule out further gains here.
Biren, what's your sense coming in for the base metal prices then? Copper prices have continued to decline, and the kind of Chinese data statements, the Eurozone concerns, all of that continues to put pressure.
I think fundamentals are bearish here. Manufacturing slowdown seems sentiment is also dented, but I think another global coordinated quantitative easing may play a trick. So I think a shallow rebound would be a good opportunity to go short. Tail end risk seems to be upside, but my general bias is to sell on rally rather than buying on dips.
Sure. Biren, that's about the non-agro space. In the agro space, there has been a lot of buzz that's continued in case of the spices there. We've seen pepper prices decline a bit, while jeera prices have seen a bit of a gains coming in. Ditto is the case with cardamom and turmeric as well. Which one are you picking up as a more safer bet?
Spices looks quite random because of uptick in algo trades and concentration of prop trading as well. Here my favorite is to go short in jeera, where inventory is comfortable and new crop arrival is little bit good. Yield is also very good, so I would go short in jeera around 13,100 200 with stop loss of 13,200 300 and downside objective of around 12,500 600.
Biren, before we let you go, a last word coming in for the edible oil space as well. While soybean prices have seen multi-month highs coming in, same is not the case really with soy oil or CPO for that matter.
CPO looks purely a structured financial reverse arbitrage kind of thing, so I don't think bull or bear can make money. Only arbitrages would make money. Here my bet is to go short in CPO, especially April CPO. I would go to short around 465, 68. My stop loss would be around 471, 72, and downside objective 455. Positional traders having long-term time span can wait for second target of 440, 445 as well.
Bharat Kumar, Director at GFM, joins in with his calls. Hi Bharat, as always, let's talk about your view on precious metals first up. What would you advise traders to do with gold today?
I think in case of precious metals, especially gold, we are seeing direct correlation between the dollar index and gold as against the inverse correlation which we have been seeing historically. Nevertheless, in case of gold, I think one should be on the buy side till it hangs on beyond $1588, which is a very critical support. Unless the market does not close below $1588, I think one should be on the buy side. Even in case of MCX, I think in case of April basis, one should go for buying at around 29,500 ranges with stops below 29,400 ranges. On the higher side, we are expecting around 29,800, 29,820 ranges in case in a couple of days. So in case of precious metals, especially gold, I think one should be on the buy side.
Right, and what about your view on crude, Bharat?
In case of energies, especially crude, it's still hanging on beyond 94.50 cents in case of NYMEX crude. So I think the trend is still intact. It's a little bit stretched. Nevertheless, I think one should be on the buy side. In case of MCX, ideal entry should be around 5200 ranges with stops below 5150 ranges. On the higher side, we are expecting around 5370 to 5375 ranges. Even in case of energies, we have been seeing the market discounting the dollar index. So to that extent, I think one should be on the buy side in case of energies, especially crude.
Bharat, what about copper? What's your call on copper?
In case of copper, though the trend is range bound between 419.50 and 412.50, the bias is on the weaker side, but nevertheless, as of now, the trend is still range bound between 412.50 and 419.50, but the bias is on the weaker side. So if someone is holding short positions, I think one can hang on. But coming to further short positions, I think the market has to consistently close below 412 ranges, wherein next leg of weakness can be seen. Otherwise, the trend is still range bound.
Let's get in Vandana Bharti from SMC, and she joins us live on the show. Vandana, hi, welcome. Let's talk about zinc first, and that one is trading at a 4-month lows right now on LME, and the LME markets, after they get shut tomorrow, will open only on Tuesday now. How would you want to trade this space?
Yeah, Manisha, it is trading down, and for intraday and for short term, what I'm expecting that in a pair trade we have seen that spread between zinc and lead, zinc and lead, it was widened, but now I'm thinking that now the gap between these two commodities will shrink. So for here, I'm expecting that zinc will outperform here lead, and for that I would like to give a buy call here for intraday as well as for short term. For intraday, I would like to recommend a buy call near the level of 104 for the target of 105.25 with a stop loss of here 103.50. And apart from that, today US GDP data is scheduled, which is a major trigger for the market, and if it recovers, then we may see further buying in the base metal.
Vandana, it has been smart gains coming in for crude prices. Do you see that continuing today as well?
Yes, because we got a positive news in energy counter, because even natural gas is doing good, and apart from natural gas, we have seen positive movements in crude oil. US higher operating rates, it is giving a boost up to the crude oil prices, and it is likely to continue into the trading session as well. Even in Globix, it is moving up. So for Indian market, I would like to give a buy call in this commodity as well at the level of 5250 with a target of 5290 with a strict stop loss of here 5235.